Welcome to the new headquarters of Rise and Fall Off Empires. You may notice immediately that everything looks different, and that is by design. This is not just a new studio. This is a new command center. The world has changed, the financial system has changed, and we have changed with it. We built this war room to track the collapse of the global financial system in real time, not days or weeks after it happens, but as it unfolds. From this desk, we are monitoring live data feeds from Shanghai, London, and New York, markets that are no longer moving in sync but in conflict. The mainstream media refuses to connect these dots, but here, we do nothing else. The very first alert flashing red in this new command center tells us everything we need to know about the state of the system. At exactly 9:30 this morning, trading in the silver futures market was abruptly halted at $98 per ounce. The exchange shut the market down just $2 away from the psychologically critical $100 level. This was not a coincidence. They pulled the plug because they were losing control. A trading halt is never a technical issue. It is never a glitch. It is a confession. When an exchange freezes trading, it is admitting that the market is no longer functioning the way the system needs it to function. What actually happened is far more dangerous than most people realize. Sellers vanished. There was no one left willing to trade paper contracts for real silver at these prices. The limit-up circuit breaker was triggered to stop a chain reaction of margin calls that would have instantly wiped out at least one major bullion bank. This was an emergency intervention. We are witnessing the collapse of the paper pricing mechanism itself. The screen might say $98, but the real price is whatever someone is willing to pay to actually take delivery. And right now, delivery is nearly impossible. As we analyze the charts here in the war room, one thing becomes immediately clear. The historic relationship between the US dollar and silver has completely broken down. Normally, when the dollar strengthens, silver weakens. Today, both are rising together. This is not supposed to happen. This is a signal of systemic failure. It means confidence is collapsing across the entire financial structure. Money is no longer rotating. It is running. Investors are no longer seeking returns. They are seeking survival. That is why this new studio exists. The news cycle is accelerating at an unprecedented pace. Events that once unfolded over decades are now happening in months, weeks, sometimes even days. We need faster analysis, deeper insight, and real-time awareness. This upgrade is not cosmetic. It is a mission statement. We are preparing for a long period of instability, volatility, and truth exposure. The halt itself was triggered by a liquidity crisis, but not the kind most people understand. Traditionally, a liquidity crisis means there is no cash. This time, it means there is no silver. Hedge funds attempted to buy billions of dollars worth of contracts at the open, and there was simply no counterparty willing to sell. Market makers stepped aside. They refused to provide liquidity. And when market makers refuse to sell, price discovery goes vertical. This is what a melt-up looks like from inside the system. Our sources indicate that at least one major U.S. bank with heavy exposure to commodities derivatives is now on the edge of failure. The halt was likely coordinated with regulators to buy time to find a bailout, a merger, or some form of emergency backstop. But insolvency cannot be fixed with a pause button. When the market reopens, the problem will still be there, and the panic will be worse. While the futures screen is frozen at $98, the physical silver market has already moved on. Real transactions are occurring closer to $130 per ounce. Dealers are raising premiums aggressively, using the halt as justification. They claim uncertainty, but the truth is simpler: they control the supply. This widens the gap between paper and physical to historic levels. The paper market is becoming irrelevant, while the physical market becomes the real economy. China, meanwhile, did not halt trading. The Shanghai Exchange remains open, and silver prices there have crossed $110. This arbitrage gap is draining whatever silver remains in the West. While American traders stare at frozen screens, Chinese buyers are taking delivery. The West halts markets to protect banks. The East keeps markets open to acquire resources. This is a strategic defeat for the dollar-based system. Investors must also understand the growing risk of a force majeure declaration. This legal clause allows exchanges to cancel contracts during an emergency. With trading halted, the probability of such an action has increased dramatically. If it happens, paper silver holders may be told they cannot receive metal, only cash. At that moment, paper silver becomes worthless fiat currency overnight. If you hold physical silver, this halt is validation. The system broke because you were right. If you hold paper, your capital is trapped inside a system preparing to change the rules. We are also hearing that major industrial consumers are bypassing exchanges entirely and buying directly from mines. These off-market transactions remove metal from public markets permanently. When companies secure silver at the source, exchange liquidity dries up. Turn on financial television and you will hear talk of a technical glitch. That narrative is a lie. The computers are working perfectly. The problem is that the price is trying to find its true level, and the controllers cannot allow it. Short sellers are now trapped. They cannot exit positions because trading is halted, while prices in Asia continue to rise. When New York reopens, the gap up will be devastating. This is the nightmare scenario for every leveraged short. From this command center, our outlook is clear. Volatility is now the baseline. $10 daily moves will become normal. Trading halts will become common. The illusion of stability that defined the last 40 years is gone. We are entering an era of chaotic price discovery. This halt is the death rattle of fiat currency. When paper money fails, real assets do not merely rise in price. The measuring stick itself breaks. The social consequences will follow. When people realize their savings are losing value and they cannot protect themselves, trust collapses. Inflation breeds unrest. This studio is our bunker of truth. As long as the internet remains active, we will broadcast. Flow data shows capital fleeing banks and moving into metals. Smart money is exiting the system. Retail investors are being left behind. Do not be the bag holder. When trading resumes, expect fireworks. A reopening price above $105 is entirely possible. If you are not positioned, you will chase. If you are positioned, hold your ground. Insurance is not sold while the house is on fire. This channel exists for this moment. We are in this together. The silver squeeze is real, the collapse is real, and the opportunity is real. Welcome to the new rise and fall off empire. The system failed, but this is only the beginning.